So in this video, I'll take you through 3 simple steps that you can be able to use to find the best trading entries or the best trading opportunities in the markets. So this will apply for especially currencies, but you can also apply the same principles to also find good trading opportunities in other asset classes. So what's the first thing that you need to be able to use to be able to identify a good place to be able to buy or to be able to sell? The first important thing that you need to be able to find is a candlestick pattern. It's not enough just to look at different kinds of indicators online that say it's a good time to buy, it's a good time to sell. One of the best ways you can be able to put the odds in your favor of finding a good entry point is to be able to use candlestick patterns. So what are some examples of candlestick patterns? So on the screen are 4 different kinds of candlestick patterns that I use in my day-to-day trading. So we have the inside bar, we have the pin bar, we have the tailed bar, and we have the 3 white soldiers. So each of these signals are different ways to be able to identify that there is a likelihood, there is a good opportunity to buy and sell when different kinds of these patterns form. So like for example, this particular pin bar is a bullish pin bar. So it usually indicates there is a likelihood that the market is going to continue to go higher. This is a tail bar. And for this particular example, it's a bearish tail bar. So it signals that there is a likelihood the market is going to continue to go lower. And each of these usually shows different kinds of market conditions and market opportunities to be able to enter and to either enter a buy or a sell. So if you can be able to learn how to be able to identify one, what are good inside bars, what are good pin bars, what are good tail bars, what are good 3 white soldiers, and many more candlestick patterns, you have the first confluence point to be able to identify a good trading opportunity. So for each of these, there are usually different scenarios whereby we buy and there are different scenarios where we sell. So this is just the first part. You need to be able to learn how to identify powerful candlestick patterns that have a high likelihood of identifying the right entry to be able to enter. But it's not enough to just find the right candlestick pattern. The next thing that you actually need is you need to learn to identify support and resistance levels. So what are ideally a support and resistance levels? So on the chart on your screen is ideally a candlestick chart. So we have the various kinds of candles, and then these 2 horizontal lines that you're seeing marked support and resistance are examples of support and resistance levels. So let's look at the definition of what exactly they are. So a support or resistance level is a level where the market has made 2 significant reversals in the opposite direction. A level where the market has made 2 significant reversals in the opposite direction. So what does this ideally mean? So these levels are not just when you open your chart, they won't be there. So they are levels that you need to be able to find them on the chart and actually draw them in. But a good way to be able to find them, and an easier way, is just open your chart. So for example, on the daily chart time frame, and then look for points whereby when the market reaches that particular point, it seems to be reversing to the upside, or when it reaches that particular point, it reverses to the downside. So if you find a level whereby the market reverses at least twice, so it can reverse more than twice, and if it reverses more than twice from that level, then it is even a more significant level. But at least 2 major reversals, either downwards or upwards, are good enough. So it's not enough just for it to reverse once, it needs to reverse at least 2 times. So there are various kinds of criteria to be able to learn in terms of how to identify support and resistance levels, but this is one of the key things that you need to learn, especially if you are trading currencies, to be able to learn how to identify these levels. So, and as you will see in this level quickly, is that it doesn't need necessarily to cut at the very highs. So as close to the highs that it can cut through, the better. So this is just an example. So find the candlestick pattern and then find a support, whether that particular candlestick pattern has formed at the level. So like at this particular point, this is a tail bar that has formed, and it's a bullish that has formed at the level. So you can see it was a very good opportunity and the market reversed to the upside. So there was this tail bar as well. So at the levels are usually the best places to be able to enter a buy or selling opportunity, but only if it's in line with a candlestick pattern that you've seen before that has formed on that level. Those are two ways in which you can be able to find good entry points. But then this works specifically well with currencies. But if you are trading other markets, let's say like cryptocurrencies like Bitcoin, or stock market like let's say the Nasdaq index, gold, palladium, other asset classes, horizontal support and resistance levels don't work very well. So in that particular case, what I found to actually work best is actually using what are called exponential moving averages. So what we are seeing here, the blue line and the red line, are ideally exponential moving average, or an average of market prices over a certain period. So like this, for example, I believe it was a 5-day moving average, and this was like a 21-day moving average. So when you have trading opportunities that form on this, we usually call it the slower moving average, like on this case, the red one, then you have a good entry point to be able to buy. So the blue line usually use it for trend analysis, but the red line, which is usually the slower exponential moving average, like a 21-day exponential moving average, then that works best to be able to find a good entry point. So if you find a tail bar or a pin bar, a candlestick pattern on like this slow EMA, on the slow EMA, then it is actually a good entry point to either put either your buy or sell trade. But then even this is still not enough. So getting a candlestick pattern is one. Getting the trading signal at a level is actually the next thing. But then the third thing that is very important when you're actually identifying good entry point is that you need to trade in line with the long-term trend. So whenever you're looking at a chart, you need to also to be able to learn how to identify what is the long-term trend, not the short-term trend. So let's look at a chart example. So for example, on this chart, on the chart here, it's actually it's the same candlestick chart, but just shown as a line chart. So in this particular line chart, you can be able to see that even just by looking at it, the market is actually going higher. So you can see I've zoomed out for quite a long period of about 6 months. And based on this, I can be able to see that the longer term trend over the past 6 months or so has been bullish. So if I find a selling signal, I shouldn't be looking to sell this particular market, because there's a higher likelihood that the longer term trend will continue. So never trade against the longer term trend. Always identify the long term trend and trade in line with that particular trend. So you can use a line chart to be able to identify what the long term trend is, but there are also other ways you can be able to identify the trend, like using moving averages. But this is a simple way to be able to identify that the market is bullish, and to see another example of, then how do I know whether the market is bearish? This example on the right is then an example of a bearish market. So similar 6-month period, but then as you can see from the line chart, you can clearly see it was going down. So sometimes when people look at, for example, a line chart, usually they'll see, but on this particular point, it was bullish. This is where a lot of people lose money, because they see the market, it is going up for this like 1 month or so, and then they enter their buy signal here. And when they enter their buy signal, because the longer term trend is bearish, they find they are losing. So never fight the longer term trend. Zoom out to at least 6-month period, and then based on that, trade only the signals in the direction of that particular trend. So those are 3 simple ways in which you can be able to master trading entries and find the best trading entries. So if you find entries that are either not at a level, not in line with the trend, whereby there's no candlestick pattern that has formed that is in line with those two, the level and the trend, then don't enter. But if you can be able to put all those 3 together, you have a trend, you have a trade at a level, and then you have a proven candlestick pattern, then you put the odds in your favor to have found a good trading opportunity that will actually work out. So you can be able to take what you've simply learned here and be able to test out in the charts. Open a chart, for example, of a certain currency and test it out. Can I be able to find, let's say, the inside bars, the tail bars? Is it in line with the trend? And then identifying what is a bullish what is a bullish pin bar, what is a bullish tail bar. So those are different kinds of trading signals that you can be able now to go ahead and learn more about them, and to be able to apply them in your trading and start putting the odds in your favor for finding good trading opportunities.